Hi everyone. Today is Wednesday, June the 26th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Why am I starting with gold? Well, because the dollar is on an incredible tear. Also, the last time that we had a video, I had a line in the sand here that triggered because what we want to see is how well gold breaks out of this range. If it moves up, chances it'll go higher. If it moves down, chances it'll go lower. So here's what happened. This broke this ledge at 23.30. It rejected. And John Hoagland had a magnificent number here at this failed rejection of this zone. It made for a tremendous bounce and fade. And so that's really what's happening. So here's my wedge formation. And so the question becomes, what happens? Anne-Marie, I want to trade this short. Is this the thing to do? So let's take a look at what's happening. This is how we frame it out. What is the trend? Well, it's down to flat. What is momentum? Well, it's down to flat. What is the formation? Well, the formation from left to right tells us that we have a lot of traders arguing around these price points, but that a prior low is holding. And that's here from the big picture. So the first time we collapse into these round numbers, and my thought is that the round number is really going to be around 2,300. It got just shy of that, and here are the traders pushing up again. So the question isn't, hey, I'm just going to go short because it broke, right? The question is, if it broke, is it a break that's going to hold, and where is the least risk that I can find taking the trade short? So my thought is this. The chart is trying to get back up into the wedge. If it gets back up into the wedge, the short formation says, listen, if I get back up into this zone, and then I leave it to the downside, so it's going to get to 23.24, and then you're going to go, all right, I'm going to short it. If it leaves and moves further down. So if it leaves and moves further down, what does that mean? Get to your 15-minute time frame and watch for it to lose this zone here. Let me show you what that looks like on a 30-minute. All right, so here's how the zone looks. You can see it's very patchy because the volume is not expansive, but here's what happens, right? Here's the zone. It gets tested, it holds, they bounce up, and then it breaks. So notice there is a lot of action above and below. And if you don't want to see my volatility bands, you can see the action above and below, and you can go, all right, well, here it is. I'm going to go. And if it stays under here, I'm going to continue. Now, your trend will help you decide if that happens. If your 14 EMA is down and your momentum, your MACD, I don't have the histogram drawn, just the lines. If that's down, chances are the bounces are still going to be sell zones, and you can stay short until the chart stops making lows. So how does that look? Well, your momentum starts flattening, and you get above your moving average, right? So you get to trade from 23.24 all the way down really to 2,300 by the time your stop comes in. But that is really how you're going to look at the chart in general, right? That's going to be the best way to look at the formations. Okay, so very quickly, that was the study event. Slow it down. I put a lot of stuff in there, and you can see how to trace your positions. Let's go backwards. Let's look at oil. These things are all being affected by what's going on in the dollar complex. So here we have oil rejecting the 1618. Look at this. 1, 2, 3, 4, 5, 6 days. Telling us that if we short at 81.80 and buy at 80.50 to 80.70, we're in great shape. Listen, that's $10 a tick. That's some very sweet cash, day after day after day after day. Buy at 80.70, sell at 81.70. Beautiful money. Okay? Now, the question is, what's going to happen when it changes? And so what we're going to have to do is create an alert at that line. Today's the EIA report. It might move, it might not. My thought is dips going to be buy zones. What is the trend? Up, right here. Near term is what we're looking at, not the whole thing. What is momentum? Up. What is the overall formation? It tells us, listen, if we come into 80 and we cannot hold it, we do not need to give ourselves any more than about 30 ticks of motion, because it could very easily come back into 77. No doubt about it. Also an election cycle. So watch out. If it breaks above 80, 83, 72 is next. As many of you know, I've talked about where the commodity technical groups are sitting, and that's all the way up at 86. So I don't know if they're early, I don't know if they're late, I don't know if they're wrong, but they're thinking that it's going to run into 86. I don't think so. Election cycle, I think something's going to get done there. Let's go to the ES. Take a look at what's happened. 1, 2, 3, 4 days in a range. It is going to break. When? I have no idea. What is the trend? Up. What is momentum? Up. How far are we away from the moving average? Pretty far. Remember, one of the last couple of days or so, I said, listen, this is the type of formation that I think we're seeing. Something that sort of holds, tries to grind higher, and can't. This is going to be the number. Can we hold 55.10? If we cannot, we're going to 54.92 and then very potentially 54.57. It's not letting me create a line there. I don't know why. So let's draw. And let's use this one. 54.50, 54.40. And we'll use that line at 54.40 to 54.50. That'll tell us if we lose 54.92, very likely that we revert to the mean. 55.50 to 55.70 is really where the resistance edges are sitting. And so my thought is, if we get up into the 55.60, 55.65-ish zone, going to make a great short because we are sitting sideways in potential mean reversion. Finally, let's get to the Qs. Same sort of thing. Look at how many days we're trapped in here. 1, 2, 3, 4, 5, 6, 7 days in motion. FedEx just reported, blew the doors off of everything. It looks really, really great. I have no idea what to think about that. But what is the market saying? Trend up, momentum up. What's going on with the actual pricing? Well, it's telling us that dips are buys, and the best dips are coming in at around 19,750 to 19,810, right? For those of us who watched Fast Markets yesterday, this is the area that we were looking at that made a beautiful long, and it closed at 981, but now we are underneath the closing tick, so we are within the range of the prior candle, which looked a lot like a Maribozu candle, which means very little wicks. A Maribozu actually has no wicks on the top or the bottom. It's very pressure oriented, and yet here we are fading, right? So what are we looking for? Well, my thought is if we get out of the range of 20,014, we could go to 20,097 and then 20,203. Listen, the high is 20,003 and some change, but I suspect we go sideways, folks. This is just my thought. We're caught in a range. Nobody knows what's going on. We are hitting highs, but not holding them, okay? And so that is key. Dips are buy zones. Dips are buy zones here. Let's take a look at SPY. Mean reversion, same thing going on here. Look, 1, 2, 3, collapses just at the 550 zone. Man, we talked about this one, right? 550 being the top of the range. And here we are, look at this, 542, beautiful entry on the fade into the 542 area. Now here's the problem. If we can't hold 542, we're going to come down here into the next area of heavy congestion. My suspicion is the dips, though they might be big, are going to get bought. So the question is, what do? What happens if you come in? Do I buy the edge of the moving average? No, you let price dip down into it and you see where the traders begin to hold their formations. How does that look? Let's look at yesterday's formation, holding. Look at how tough that looks, right? This is yesterday. This is the hold of the lows from the prior day. So if you're saying, hey, listen, I'm going to buy that moving average, it looks like it's moving up, you're going to have a lot of risk. So when it loses the average, say to yourself, okay, look to the left. Where do I see buyers coming in? Can I take a chance and say, okay, I'm going to get as low as I can to 542. Then I'm going to take it. And if I lose my 540 210, I'm out. I'm out. Same sort of thing. Look at the fade. Big fade. What's it going to do? It's going to try and test these levels. So let it break. If it's downward and you're looking for a long, you've got to let it break, because the formation for the 30-minute, even though you're looking for a long on the daily, the formation on the 30-minute says, Kui Jets, there are no longs here you can hold. Notice, see how the traders try to buy this? Price action shoots all the way up there into the old resistance zone, and the traders go, no, good night, and they force it back down. Is this heavy congestion? Yeah, they're going to try it again, but what's trend and momentum tell us? That the bounces are going to sell, and the next clear bounce that's going to sell, probably around this zone. So take care to pay attention to where price action is telling you it is going. Take a look at this. Comes into the moving average, fails there, bounces right off of the zone. This is perfect. So let's go to see how it bounces off of yesterday's edge. Look at this clean motion. See it bouncing off? Look at the pullback for the retest. To the left, old resistance, new support, Bob's your uncle, right? Upward formations. Your job is only to say, how can I get involved without the risk? And that's going to tell you to wait for the pullback. On these 30-minute charts, old congestion says traders are buying. Even with the fade, buying. If you come back into an area that all they've done is bought, that's going to be your zone. And you can buy and hang on for price action to move to the north. Same thing going here. What are they telling us? That's downward. So the bounces are going to say, I'm going to sell until I get into heavy congestion that tells me where to hold. Could the heavy congestion be here? Yeah, it sure could. Well, if it bounces, it better stay up over that moving average or it's going to fade some more. All right, lines in the sand for the Qs, 473 to 480. That's a lot of motion. So watch for 475 to 476 to give you an upward pressure event. All right, take care, everyone, and I'll see you on the platforms.